If you want 3 tips on how you can legally reduce your tax obligation and have more money to put to work purchasing assets, watch this entire video. Let's take a look at how the wealthy are approaching taxation, wealthy organizations. Now, a little while ago, the G7, a group of 7 wealthy countries, including America, got together and agreed on a global minimum business tax. Basically, they wanted to institute this global tax so that if I own a big business and I want to go to a country with a lower corporate tax, it really wouldn't behoove me to do so because all of the wealthy countries had standardized their taxation system. Now, in my mind, that's going to be an opportunity for smaller countries that are not a part of this to go ahead and undercut all of these bigger countries, but we'll see what happens. The crux of the matter here and what I want to talk about is how the wealthy approach taxation. First of all, they make a lot of the rules, but these rules that they're making are not exclusive for them. The rules tend to spill out and be available to us all. So if you're sitting there still getting that tax refund check, we've talked about why you should not do that. If you are someone who doesn't really pay attention and doesn't understand the impact that taxation has on your ability to build wealth, you need to watch this video. Now, we talked about that global minimum tax. Well, guess what? The financial services industry has come out and said, you know what? We should be exempt from this arrangement, this new arrangement. Mind you, the financial services industry is the most lucrative industry in the entire world. That's the business, one of the businesses that we're in, financial services, and then in real estate as well, which happens to be the second most lucrative industry in the world. So what's going on out there? How did these companies, how did this sector, the financial sector, decide to get themselves exempt from this new global minimum tax? And what can you learn from it? Well, let's go over it. I'm reading a story here from the Financial Times out of London. I'm going to link to it. Financial services sector set for carve-out from new global tax rules. The UK is poised to secure an exemption for financial services from new global rules on taxing multinationals, in a move that would ensure the City of London's largest banks do not pay more tax on their profits in other countries. Okay? So the financial services industry is saying, hey, well, hold on. You're talking about a minimum tax. This could impact us. This could take money out of our pocket, which is what taxes do, not only for them, but taxes do that to you as well. They take money out of your pocket, leave you with fewer resources to put to work on your behalf, gives you less of an opportunity to acquire assets. So the financial services sector in London is leading the charge, saying, oh, wait a minute. We want as much money as we can get our hands on. You guys can go and do whatever you want to do. This might be okay for other industries, but it's not okay for us. We want as much money as we can get. That's how you should be thinking. The talks at the Paris-based OECD, which are due to conclude on Thursday, have accepted Britain's case that the financial services industry be carved out of the proposed new global tax system, according to 2 people briefed on the negotiation. Now, the OECD is the Organization for Economic Cooperation and Development. Story goes on to say, but UK Chancellor of the Exchequer, Rishi Sunak's victory in haggling over the details of new corporate levies came at a cost, said these people. He had to make concessions to the U.S. on dismantling Britain's digital services tax that is focused on American technology companies. So here we have America and Britain doing a little horse trading, and Britain saying we don't want our financial services sector to be impacted by this new global minimum business tax. And America is saying, okay, we can get with you on that if you throw us a bone and get rid of this digital services tax that you've levied on our technology companies. So you see, even the government is saying, look, we need to get rid of taxation. But who ultimately ends up paying more and more taxes? You, the private citizen. Okay, you, the person who is hell-bent on getting a tax refund, even though in reality, all they're doing is paying you your money back that you overpaid. And you've, in effect, given the government, the U.S. government, the multi-trillion-dollar budget U.S. government, you just gave them a one-year interest-free loan. So start thinking about taxation differently. Also, take a look at these industries that are poised to win throughout this 21st century. The financial services sector is definitely one of them. And it's a business that I love. I've been in for quite some time now. And if you have any interest at all in looking at an opportunity in the financial services business with some of the largest companies in the world, then go ahead and leave us a comment. Go to our website, mcenow.com, and send us a message through that. Okay, this carve out for the most lucrative industry in the history of the world came in the first part of the global tax negotiations at the OECD club of mostly rich nations, which are seeking to define where the largest multinationals have to pay tax in the future. In the first part of the talks, dubbed Pillar 1, the UK and France have pushed to ensure the largest companies, especially U.S. tech groups, pay more tax in countries where they operate but are not necessarily located. U.S. tech sector, y'all got to get some better international lobbyists that looks like they're just steamrolling you. But the financial services sector just, slides on in there. The U.S. agreed to focus on taxing multinationals more based on where they operate, so long as other countries committed to removing their digital taxes, but shocked the UK by saying that the Pillar 1 tax rules had to apply to all sectors, including the financial services sector. So this was just this was a negotiating tactic by the U.S. They knew that they were going to push against the UK for these rules on the financial services sector. And then when the UK came back and said, okay, what do we need to do to make this happen? What do we need to do to get this done? Then the US was going to come back and say, hey, we want some relief on taxation of the tech sector. All right, like I said, I'm going to link to this. I'm going to read one more passage from it because it's very interesting. And again, this should be telling you that in terms of taxation, you should be looking at all options to reduce your taxation now and in the future. Legally, the tax code, again, is replete with provisions that help you do just that. Okay, one of the colleagues of the Chancellor of the Exchequer over in England said, I think it's a fairly obvious point. The Americans want domestic digital services taxes removed. They will be, but the whole thing has to be looked at in the round. So he's been very definitive here, saying that, you know what? They're going to get what they want, and we're going to get what we want. And at the end of the day, just like we discussed on a previous video, taxation for the middle class in America is increasing in the form of not allowing people to deduct more by contributing more to 401ks and IRAs in 2021. On the flip side, they are raising the income limits so that you can still qualify to contribute to a qualified account, even if you make more money. And they're not doing that, they being the United States government, the IRS, they're not doing that out of the kindness of their heart. They're trying to get more people into a situation where they have deferred retirement accounts, like a 401k or traditional IRA, so that when that account is taxed in the future, when taxes will be higher, they'll have more people paying taxes from these accounts at that point. Okay? So it's a very complex situation in many ways, but let's suffice it to say that if you want to be on the winning side of this, there are several things you can do. Number one, if you have any entrepreneurial designs whatsoever, you need to take a look at the financial services business. It is a very lucrative industry, the most lucrative industry. Number two, if you are working a W-2 job, you need to really sit down and talk with your accountant, your CPA. If you're getting a tax refund, you need to figure out how you can stop overpaying the government, because that's what you're doing, and they're not giving you anything in return for that. So you need to figure those two things out. And then a third thing that you need to do is you need to look for opportunities to reduce your level of taxation. Again, now and in the future. Now, the qualified accounts help you to reduce your level of taxation now by allowing you to deduct your contribution. However, there are vehicles that will allow you to reduce your taxation later. They include the health savings account, the Roth IRA, and a properly structured permanent life insurance. And in our next episode, we're going to talk a little bit about that.